Happy Monday, traders. It's 8 a.m. Chicago time on the 28th of October, 2019. This is episode 1626. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. You've probably seen the markets at the S&Ps are at all-time highs on what is likely to be a fairly active week. This week we have the Fed rate decision expecting a 25 basis point decrease again after a rally day on Friday. So overall, the market's feeling pretty good about itself. The Brexit's starting to look like it may fall into place. Looks like the EU has given the UK a 3-month extension, and all is good, I guess. So a few things have been worked out with China, between the U.S. and China, and the market's pricing that in as well. The Nasdaq's up 42 points, or up a half a percent. The bonds are off 25 ticks, down half a percent on the futures. Futures prices, that's not yield. And gold is trading at 1500 again, down 0.33, 0.35%. So clearly, risk on sentiment. The market's piling it on. A few interesting things to cover today, including what was that on Friday? A little surprise there. Well, not surprised, but kind of played out the unexpected. So I'll cover that in a bit. In terms of what the calendar looks like, the week, as I said, is pretty busy. Today we do get this vote from the UK at 1 p.m. on an election call. Uh, so the market, the Europeans will be paying attention to that. Nothing serious tomorrow, Tuesday, but on Wednesday we do get GDP out of France, business confidence out of the eurozone. We do get GDP from the U.S., inflation rate out of prelim for Germany, and the Fed release at 2 p.m., followed by the conference. And then on Thursday, we get GDP from various countries, personal income, personal spending, and Caixin manufacturing PMI on Thursday night. And then Friday, we have non-farm payrolls, which is the other very important release for the month. As we start November, um, we're already at the end of the month here. So that's where we stand. Let's take a look at what was expected on what happened here. What was expected on Friday? Looks like I closed that window. Let me grab the image of that. Really surprised. Sorry about this. I was prepared and now I'm not. Oh, there it is. For some reason, can't see that. Okay, so this is actually, for 1 second, let me step back and let everybody know that I'm going to be on Futures IO tomorrow. I did a talk ahead of the micro index release that was scheduled for the May 6th session. And I'm getting on tomorrow to talk about an update and important lessons plan. Some of you may remember that I started pushing for these micros in 2012. April 2012 is when I first met with the CME to talk about this, and the product release has been a great success. It just has done very, very well, not only for the exchange, but I believe for traders. I think the intent behind pushing for the micros has been served, with traders moving away from simulating for a long time to actually trading the indices and getting a one tick spread on a very well behaved, very well traded product. The volume on it is excellent. So I'll be talking about that on at 4:30 p.m. Eastern tomorrow. The registration link is right there, and I'm also popping it into the chat room. You can click on it and register. Please do register, and even if you're not going to attend, so we can get you the video. Okay. So let's get back to business. Yeah, I'm working on the micro crude is the next thing. I'm really working on that. We'll make that happen soon, hopefully. Here's what I expected, given the way we popped above the prior high and sold off the day before. The expectation is for responsive buying into the 3006 area, and then I was looking for the market to sell off on Friday. Otherwise, the expectation was for the market to just grind lower. And in the case of it grinding lower, I expected it to move a lot farther. It's selling off on responsive buying. The expectation it'll likely find a bid around 29.90. That is not what happened. This was completely off on the first and secondary scenario. I was really looking for evidence of a short. And what actually happened is once it squeezed through, and I'll go through the chart here in a minute, once it squeezed through and it looked like it was an open auction, an open drive, a slow open drive, once we saw that, it made no sense to try to hang on to the short side. However, the way it was grinding up just made it difficult to find a long trade because pullbacks were few and far between. So here's what we saw. If you look at the hard right edge, here's what we saw on Friday. It opens, it looks like it may be an open auction early, and then it just keeps squeezing higher and higher and higher. And the area that I was looking to short is 3006, 3007. So that was the short trigger area. And it looks okay, looks okay, looks like it's going to fail, and then it just squeezes through. So now we close the point of control. We tag the point of control. So short from 306, 3006, 307 puts our stop at 3010ish, 3010ish, which coincides with this last area here from Friday afternoon's high, or what we would call the closing swing. So that's a very clear, very defined risk area up there. So we want to see this 3009 fine. It got the point of control. Now we're looking for it to roll over to see that scenario one is playing. And it looks okay until it doesn't. And this is the classic, this is the worst kind of trade for me. And I know this, and it's okay. This type of move occurs uh, not so often, but it's important to recognize that this is what's happening. We're not getting an opening swing, and the half hour is over. This is a threat to any shorts. So you stay off the shorts, you take your stop, you stay off the shorts, and then it looks like a nice little squeeze there as buyers lift pretty strong and pretty consistently to the next key area, which is 30, 14, and 15. We get a little pullback. This is the first chance of potentially getting something down into the 3011 to 3000 line. This would be a pretty good area for a long, for a bounce, and to play with the stronger hand. Remember the analogy of a bar brawl, right? We're witnessing a bar brawl at the open. Seems aggressive, seems feverish. We see punches being thrown, and we don't pick a side to fight with yet until we see which side has the bigger goons, right? So this is what we're here to identify. That's just another way of looking at the market. Can contrast that to the much more refined surfer visualization, but this is the same process. We have a range extension up. There is no reason to get short here. No reason to get short. Doesn't matter what the area above is. Not seeing a reason to get short, and it just continues and continues. And this is basically what a drive looks like, but it was kind of a slow motion drive. Notice that as soon as we hit the European close, the uh, the buying stops, and then we just completely go sideways for the rest of the day. Um, And so there's nothing for me to really push against. Remember, I'm not interested in putting on a trade unless I've identified an area where I'm wrong. Unless I've identified an area to lean on, and there wasn't very much to lean on the way up. Right, the first chance that was in this 30, 15, 14 area, never pulled back there. So it's just one of these days that frankly I'm not suited for. Different people are suited for different things. You know, some people are great at mean reversion and like to trade from the outside in or extremes in. Some people are trend followers, breakout traders, and so on, momentum traders. And everybody gets, everybody gets a piece. The market kind of round robins and pays and takes away from everybody who's got their plan together. So this is just not my kind of day. We finished with the point of control in the upper quartile of the range, essentially. And this tells us that we are likely to sustain another move higher. The market did not give up any structure and found balance and acceptance in the upper area, giving us a very, very clear spot at 3016 for a neckline and a potential future support area, test area. That's how we ended up. Since then, in the overnight, here's what we've done. We reopened and we were in a really awful box here in the overnight session. Really horrible for those traders who are trading overnight. Just 4 points of range or so, not even 30.2275 to 30.26 and a quarter for most of the Asian session. So what is that? 4.5 points. And then we get a little pop right on the European Open, and then we just kind of continue to flow sideways, and then just now we broke higher. Um, uh, we did get the wholesale inventories number, which was -3 versus 0.2, but that's not really why this thing popped. It popped on President Trump looking to be ahead of schedule on signing a phase one of U.S.-China trade deal, expects to sign packed at APEC meeting in Chile. So the market responded to that with a big push up right here on the volume scope. Big push up. You can see this finished pretty strong, and since it finished pretty strong, the expectation is it'll likely to continue to drift higher. The next bar up, this bar here, actually showed a preliminary sign of a potential rotation lower. The market pushed higher, closed within this big push bar on negative delta. I did expect this to kind of pull back a little bit, but buyers are just insatiable at the moment, and so it goes. So the expectation is for that to continue on into today's session. Let's look at the order flow for a minute on ctbookmap.pro. We're pushing up against a measured move top at 30.35 right now. We do have some volatility bands up here. The next volatility band actually is a lot higher. So we have this measured move up here, which also coincidentally has, measured move. I use measured moves when there is no existing structure We have not traded here in the past, so we have no indication as to what acceptance or rejection is. But we do have a measured move. Usually I use these as targets coinciding with a heavy offer, a relatively heavy offer. Above there, 30.40, above there, 30.42. And below us, you could see the overnight session was really a non-doer. It didn't really accomplish much. Below there, it's Friday's close at 30.20. Below that at 30.15, and that's all there is in terms of order flow. Things are likely to get pretty tricky for value traders going forward since we are in all-time highs. Things are likely to get pretty tricky because the reference points are not all there. So we have to. It's really important to make that decision to cut down on size, manage risk a little bit better, and let the market kind of flow with what it wants to do versus trying to impose our opinion on it as it pushes new all-time highs. With new all-time highs, a couple things tend to be true. Generally, volatility drops dramatically. Generally, range drops. Excuse me, let me clear my throat. Generally, the range drops. The daily range drops quite dramatically, and volume tends to slow down. And there are clear reasons for that. If you are long, if you're a long and a lot of funds are long only, stocks tend to be a buy and hold type of thing. If you're long, there's no action to be taken except to wait for your signal and get more long and more long and more long. So in general, there isn't a reason to exit stocks or re-enter them or whatever for the greater majority of the volume. So the volatility and volume tend to drop. And so just recall that once we get up here into new all-time highs, unless it pulls back into the range, and we've seen this quite a bit. If you look back, let's look back. We've seen this quite a bit where we push a new all-time high, and then a couple days later we have a drop. We push new all-time, well, we didn't quite push new all-time highs, but there's a tendency to push highs, pull right back, push another high, pull right back. There's a tendency to have that happen. We'll see today. I'm really taking a back seat because the market's already kind of beat me to the punch into 30, 31 and a quarter, the all-time high. So it's time to just sit back and let the market kind of figure out if it wants two-way action or if it wants to just push directionally and then go from there. What is the plan for today? Before I get into that, I want to remind everyone once again to register for tomorrow's webinar at Futures.io. The link is in chat. I'll be discussing the micro indices, providing an update on volumes and what it's done. The topic is outlined here. Please take a moment to register for that. In terms of what we've got for today, set this chart up. Here it goes. So we are really pushing into new territory here. The expectation, and here's where I fall back to just standard auction market theory, the way of the auction. The expectation is for an open auction out of range, for newcomers to push in, but I'm looking for it to revert back. I'm looking for it to start moving towards the 30.2650 and then to hold steady and sideways for the day. I'm expecting it to just take out that overnight high and then pull back and just go sideways. The secondary is responsive selling. Responsive selling is the auction, an open auction with responsive selling as the auction pushes as those who are in the money take some profits off the table early on. We push back to 30, 31 and a quarter ish. 3026-ish, and then push back up, take out the overnight high again. I'm expecting sideways. Now, because we're at all-time highs, there's a higher probability that we have OTF participation. Um, and for that, we are looking for an open, small test, drive up, and then a grind higher into the next measured move area of 3048 or so. That'll be the next that'll be the next key play. I'm honestly, these have an equal chance. I'm just the market could be responsive, could revert back after taking out the overnight high. That's what scenario one is. I'm gonna sit and wait and not put too many expectations. I know what areas are key here. The 3024 below that 3015, 1615, below that 3009, and then below that 3004, 3005. I know those areas to be key. Everything above there is above the high is a guess. These are measured moves. These are kind of fictitious numbers, mathematical numbers that are created using Fibonacci extensions. So not going to lean on those as much as I can lean on the market structure as well as the volume profile levels. Anyway, I'll leave you with that. Again, don't forget to register for tomorrow's webinar. Take care.